Okay, good evening. So I think we can start. No one else is joining here. The basic analysis I have already presented on the Discord channel. All those things which were to be seen. So I will just review them or do the same thing quickly for better absorption of the things. So basically, we come to the weekly time frame of Nifty. Weekly candle was very bearish. Am I audible and can you see this chart? Okay, great. Okay, so weekly candle was very bearish. Weekly RSI is at levels of 49, near 50 levels. Last time it was in October 23 where it reached the levels of 48. So some kind of decent correction has already taken place. The correction up to this extent is considered, if it is a bull market, if it is a new bull market which is 4 to 5 months old, then it is considered good correction because it sets up the base for the next leg of the rally. But for a bull market which is already 16 17 months old, things are not so. Okay, so then on daily, Nifty is in this channel. Wave A was here, then wave B some kind of consolidation, then wave C. Equality wise, we have completed almost 78.6% of this thing, but equality will come only at 23,700. While in Nifty futures, this equality will come at 23,900, and Nifty 500 equality has already come. So Nifty 500 being a much broader index actually gives better wave counts and better kind of technical analysis than Nifty at times. Okay. What I wanted to discuss here was, how to predict market by using past templates. So this top was made on 27 September. Okay, that is the initial week of October or last week of September. In the past years, if you see our top which was made in October, then we have to go back to something was there in September, mid September, uh, and again we have to remember that the origin of this rally was in March 23. So we are looking at a rally which is almost 17 months old. Oh, sorry, 19 months old. Yeah, 19 months old. And we have the first data point is it is a 19-month-old rally, and second data point is that top is being made in the first part of October. So with these two data points, you have to look for such an example in the past. This is a basic way of doing time cycle analysis. So something which comes to our mind is here, October 21, because rally started again during COVID crash in the last week of March. It was 23rd of March 2020, and here it was again 27th or 28th March. So it was March last week in both cases. Here the top was made on 18th of October or 19th of October, and this year also top has been made on 27th September, which is almost two weeks prior to that. Okay. Uh, so this is one template which can be followed, and what we see after what happened after that was 2 months of correction. Yes, 42 sessions, 62 days, 2 months of correction, uh, where Nifty corrected by 11% or 11.8, almost 12%, and it corrected in 5 waves, A, B, C, D, E. Okay, so this is the template I am looking at. So now my timeline is 21st November. What we achieved here on 20th December 2021, we should achieve this year on 21st of November, because rally has not been so steep as it was in 2020. But it should again be in 5 waves. Okay. Why 5 waves? If the correction has to be for a longer duration. Okay, if it has to be for, let's say, 12, 10 months, 12 months, then the beginning of the correction, more the number of waves, more impactful or more powerful it is likely to be. So if it is just ABC, then ABC is an intermittent correction, which doesn't mean, which tells that correction is not going to be deep. But if it is 5 wave correction, then generally it gives an idea that it is going to be for longer duration, but it is going to be a multi-month correction. Okay, so this is one template I am looking at. Before this, so 2018 top was also made in January, it was not made in October. No, this was in 2015, it was in March. Then February, then here it was November in 2010. Although market has changed a lot since then because of reduction in FI holding. Now this is 2008. So 2008 first there was a let me go back in past. Okay. So this is how it started. So there was a sharp correction. This day Nifty corrected 8% in a single day on 21st January 2008. Okay, and if we see this thing on weekly, then this first week was 8% correction. The second week was a movement of 21% in a single week. So obviously this market was very light that time, and now it is heavy. So we don't expect such movements. But just to see the patterns, how corrections take place. And after this extreme correction, where Nifty RSI went to levels of 16, we saw a bounce, and this bounce took place in ABC form. Okay, and it retraced 61.8%. Let us see how much it retraced. Yeah, 61.8. Okay, of this rally, and this bounce from the bottom was 24% move in Nifty. So it was a strong move. It is not a easy 24% moving in 1, 2, 3, 4, 5, 2 weeks. Okay, so this counter bounce rallies are very strong. And maybe I just put a moving average thing. So it took support at 200 day, moved up to 50-day moving average or 21-day moving average, and then got rejected from 21-day. So what I am looking at in this counter move is a bounce to 61.8 and a rejection at 20-day moving average. Okay, so this was a classical example of this thing taking place. Okay, and then price went sideways. This is complete distribution, and it again started gradually. Okay, it remained sideways for a long time. So from here, that is January till June, price remained sideways. So this is a very long base it was making, and the longer the base, longer the consolidation, bigger will be the range. Okay, the longer the consolidation, higher or the more will be the distance traveled by the price. and here it gave a breakout in June 2008. It retested the channel breakout in July 2008, 10 July, and then it retested it multiple times and again came back. So a lot of consolidation which was going on here during this complete period, August 2008. And I think final break came here only in October. Yeah. So there was very long, almost 9 months of sideways move. But in this sideways move, Nifty actually moved this range of this channel was 26%. So Nifty was moving 20-25% up and down in this range only. Okay, and then it gave a breakdown from here, another 37% down. Okay, so this was a classical A, then this wave B consolidation, and then wave C. But here intensity of first breakdown was so high that it certainly told that this long bull market is over. 30% down in 2 weeks. Okay, so now we can come back to our charts. So now we are here, and what I am looking at, since Nifty 500 has given wave C equal to wave A and monthly expiry is nearing us, so I am looking for a profit booking in shorts, and already we have seen that FIIs and DIIs both are booking their profits, short position profits, covering their shorts. So I think another move down, maximum they will take out this low at 23,900, and then they will consolidate in wave 4 or wave D. A, B, C, I will mark it. A, B, C can be here, and then D, and then E. And this wave D, this consolidation should end at 20-day moving average. 20-day moving average is at 24,940. So somewhere this level, 24,800, 24,900, in this zone, it should meet the resistance, and that will also, from this high, if it takes out this low, that 24,700 will be 61.8%. Okay, so somewhere in this zone, 24,800, 24,900, Nifty should bounce to this zone after 2-3 days, or maybe from this Friday once the expiry is done. Okay, so this is the general thing I am looking at. And yes, there is a oversold condition on broader market, so we can expect a strong bounce up for those 2 weeks of time, where stocks or indices can move 5-6% up, and a few stocks can move 10-20-30% up. So this was the general idea I have. Rest I have already shared things in the channel. You can ask your queries.